Welcome everyone again to another episode of this week's Wilson Weekly with the one and only Dr. Andrew Wilson from the My Housing Market. And Doc, you're feeling a bit snotty, bit under the weather this week.
Well, I just picked up one of those nuisance, annoying little colds. You know, it is winter; these things happen. You just can't avoid it, particularly if you live in big cities, I suppose. So, if this is as bad as it gets, then that's okay. So, if you hear a pause every now and again, it's because I've hit the cough button. But I'll try to soldier on. I've got a few lozenges here and some tissues and the cough button. So, what more do you need? And plenty of good information today, Ben. So, of course, it's been a very exciting week in the housing market, and a week that's really shocked a lot of the so-called experts, commentators. I'm referring, of course, to the Reserve Bank's decision in terms of interest rates. And interest rates are on hold, and just about everybody, except me, predicted that the Reserve Bank would cut rates again. I think this might just be a bit of a pause in the cutting cycle. I think that might resume next month, but we'll wait and see, and we can discuss that when we look at the actual numbers from this week's decision. But interesting week, and we'll have a look also at the latest rental market data. No real relief there for tenants. Plenty of people looking to rent properties. Queues are still long outside open for inspections. So probably the good news is we're not seeing higher rents as yet, but I think that's just a matter of time before those tight vacancy rates translate to higher rents. And of course, again, we've had another very strong week in terms of the auction market results. Quite surprising, really, that we're now into
unusual
the
for winter, right, Doc?
Yeah, and it's just some consistency there in terms of buyer activity. And yeah, right, we're into July. This is normally when it all starts, the quieter period. Of course, school holidays are just about everywhere, I think, at the moment. And yeah, and usually people take a bit of a rest from property decisions. Not totally, but particularly mid to higher priced markets tend to be less active at this time of the year. But gee whiz, no one told everybody else, because the markets are still very robust for this time of the year, and it'll be interesting to see if that continues. I doubt it will, because we're certainly getting fewer auctions coming in to the market, which is what we expect. But those that are coming in are certainly not having any difficulty finding a buyer. So we'll have a look at those results as well, Ben. So what's happened this week in property, as usual. My brand is My Housing Market. We act as independent commentators and data providers on the housing market. We bring you this podcast every week in conjunction with the good folks at Infinity, and we are all about the current state and future prospects of housing markets. Of course, this is all about evidence-based insights into the housing market. No clickbait here. We're trying to facilitate, or we do facilitate, decision-making in terms of property. And you always want the best information and the latest information when you are making property decisions. So let's get started, Ben. And this is the week to Wednesday, July the 9th. Really moving into the middle of winter now, and typically we should be seeing a significant easing in activity, particularly in auction markets. But as we'll see at the end, we're still getting some very strong results in most of the capital city markets for this time of the year, in fact, for any time of the year. So this week we're going to look at the latest RBA interest rate decision. Bit of a surprise decision from the RBA. Most commentators were predicting a rate cut. Didn't happen. Interest rates on hold. So that was a bit of a surprise. I think perhaps it'll only be a pause in the downward movement of interest rates, official interest rates, and but we'll have a look at that in some depth, and we'll also look at the latest house and unit rent report. So that's for June. So let's have a look at how the rental market's performing, and of course, as usual, we'll look at the latest weekly auction results, which gives us a timely insight into what's happening generally in housing markets, capital city housing markets, from week to week. So let's get started. As RBA leaves rates steady over July, shock horror. Just about everyone was saying that there was going to be a cut. Didn't happen, and there are a few commentators whose noses were really out of joint. I think, how dare the RBA not do what they predicted? But, well, without trying to put my hand up, I did predict that. I said that perhaps rates should stay on hold, and I was a little surprised. I thought the RBA would cut them, even though I said that they shouldn't cut them. But I think that will change next month when they do get the latest inflation data from the ABS. And if that continues to be positive, I think that we'll get a rate cut, which would be the third of the year. So, mates, RBA leaves rates on hold over July following the May reduction. Rates are now steady at 3.85%. That's the official interest rate. And as my comments were in relation to the outlook for interest rates or the decision for this month, I think the current rate settings have achieved a balance between growing consistency in maintaining the RBA's inflation rate and a strong economy as reflected in a robust and resilient housing market. That was my reasoning behind why we should have seen rates remaining on hold. And it turned out that way. I mean, what the Reserve Bank is trying to do with interest rate policy, with monetary policy, is to maintain stable prices. And that, of course, has been the main focus for the Reserve Bank over the past few years since we had that breakout in the inflation rate as a result of all the stimulus packages through COVID. Whether higher interest rates have achieved that or it's been just something that was going to happen anyway is open for debate. But nonetheless, we have been, over the past few months, well within the target range for the Reserve Bank for inflation, and that is between 2 and 3%. So we've been there. The latest monthly data placed us, which we looked at last week, which placed us right in the middle of that target range. So a tick for inflation control. And of course, the other factor that the Reserve Bank looks at in terms of its monetary policy decision making is to maintain a strong economy, in particularly full employment. And we certainly have a strong economy, as we have discussed recently with the latest data showing us that the unemployment rate remains at a very low 4.1%, and the participation rate, which is important, is also at a near record high. So the two factors there, prices and the economy. Prices are steady within the Reserve Bank's target range, and the economy is strong. So on that basis, why would you change interest rates? You know, seems to be achieving the twin goals of the Reserve Bank. But I think that the Reserve Bank still has a mindset that rates are too high still, and that if they can get a bit more consistency with inflation, they would be happy to cut rates. Of course, that would make a lot of people happy, particularly mortgage holders, and which would be, I guess, a quasi pay rise with an interest rate cut. But the problem is, you know, would it start to work its way into higher prices because of, you know, that would just stimulate more demand in the economy. So anyway, that's the RBA's decision to make ahead, but certainly rates are now on hold. And there's no doubt, Ben, that the lower interest rates this year, as we looked at last week, have stimulated housing market activity. And it's quite clear to see that, you know, growth in housing markets has accelerated prices growth. And even some of those markets that were struggling a little bit towards the end of last year, Adelaide and Perth, have rebounded. And that is no surprise. Lower interest rates always improve affordability and add to confidence, really regardless of what's happening in the economy broadly. And no surprise, particularly given we have a strong economy, that those lower interest rates have kicked up house prices. So, and I think that will continue going forward. And if we do get another cut next month, that will only work its way into what is looking like anyway a very strong spring selling season to come. So this is what the board said. It said that in terms of its decision this week, the risks to inflation are more balanced now, as we said, and the labour market remains strong. So reflecting some of my analysis there, I guess. But it's still cautious about the outlook, and that's, you know, always about risk management by the RBA, because things can come out of left field. So it still has doubts about where demand and supply will land. And I think this is the important point, is that it wants to see the latest quarterly inflation data, which will be coming out in a couple of weeks' time. That will be for the June quarter. And it will use that as a basis for its next decision, a more stronger basis for its next decision. And the portents from the monthly data that we've seen recently are that we'll see another positive result in terms of steady lower inflation with that June quarter data So as I said, I don't think there'd be any surprise if we had another interest rate cut next month. And of course, as I said, that would be good news again for mortgage holders and for homeowners, because usually, well, it will result in higher home prices. Probably not so much good news for first home buyers, but it's certainly good news for the housing market in terms of particularly home owners. There's our cycle there in terms of the cash rate, the official RBA interest rates. We can see we've moved into that downward cycle now in terms of rate cuts starting in February. First rate cut that we'd had in 4 years in February, and it's certainly trending continuously down. It's interesting that we haven't seen a month by month type of cut to interest rates. It's been a month down and then a pause and then a month down. So perhaps that's what's going to happen with next month's result. It will continue that trend of a cut, then a pause, and then a cut, and then a pause going forward. As I mentioned, home rental markets are still tight. This is the June data. We've still got those very low vacancy rates for both houses and units. We saw vacancy rates start to rise at the beginning of this year and into April, but that was mainly because of the holiday distractions. Typically, and April was a big holiday month this year. Of course, we had Easter in April, then we had Anzac Day straight after, and then, of course, we had the distractions from the federal election campaign. So that those scenarios always tend to reduce demand in rental markets. That saw vacancy rates rise. But over the past 2 months, we've seen vacancy rates going back to, I guess, what which we've normally experienced, which is very low, in fact, near record low vacancy rates. And of course, that means that there's plenty of competition amongst tenants for available properties. Although we haven't seen it as yet, we're likely to see rent increases sooner rather than later going forward with these very low vacancy rates. So let's look at houses. We can see there when we look at the vacancy rates for houses over June, all vacancy rates there are below 2%. 2% sort of the balance position for higher and lower rents in terms of vacancy rates. Typically higher than a 2% vacancy rate will put downward pressure on rents, and typically lower than a 2% vacancy rate will put upward pressure on rents. So not only are we below 2%, where most capital cities are actually below 1%. So these are very tight results. We've seen this for years, these very low vacancy rates, and this is for houses. So no relief there after we saw that adjustment in May following the holiday period in April. So those low vacancy rates consolidating over June. Sydney's still the most expensive place to rent a house. Median asking rents in Sydney at $800 a week, steady over the month, and a little easier over the year. That Sydney house rents, similar story there in Melbourne, but the others are mainly flat, with the exception of volatile Darwin, where rents were up by 10.3%, and for the first time challenged Sydney as the most expensive place to rent a house. So houses, vacancy rates still tight. No sign yet of rental increases, but I would expect that to change as these vacancy rates continue to be tight. Similar story with units. Vacancy rates still tight as they tightened in May, similar to houses. A little bit higher than houses, the vacancy rate for units, but still all of the capital cities under 2%. And when we look a bit closer at some of the data, the Melbourne vacancy rate at 1.7% has actually fallen by a full 1% over the past 3 or 4 months. So that Melbourne rental market for units is starting to tighten. And we did see rents rise in Melbourne for units up by 0.8% over the month. So there has been a real tightening in Melbourne rents for units, and also an increase in Melbourne rents for units, reflecting a tightening of the local market there. But still, as I said, all the capital cities are below 2%, and most are hovering around about the 1% mark. So that is a tight rental market, and will mean eventually higher rents going forward. So when we look at the annual growth in unit rents, it's Adelaide, Perth and Hobart that have recorded the strongest results in Canberra. But we need to take particularly the Adelaide and Perth rental results with a grain of salt, because they are quite small unit markets. But nevertheless, rents have risen in those smaller capitals over the past year. So no joy there for tenants, unfortunately, Ben. If you're looking for a rental property, you're going to have to do a bit of wishing and a hoping and a praying, when you're in the queue. Going forward, good news for the landlords, even though we're not seeing rents rise as yet. There's still plenty of competition for property, which means, I guess, it's about being able to secure a perceived quality tenant, given there are so many choices from those seeking rental properties at the moment. If you've missed out on that June rent report and you want the full background to it, there is a QR code on the screen. You can scan that QR code, and that will give you a link to a full PDF copy of the June rent report. So, as usual, we're going to finish off with the latest weekly auction results. And as I mentioned, Ben, we've had just a remarkable past month or so in terms of auction activity, particularly for the Melbourne market. Melbourne's certainly up and running now after a couple of years of subdued activity. Most of the other capitals have been certainly onwards and upwards in terms of prices growth, particularly home prices growth. Melbourne market has just moved sideways, really, particularly over the past year. But now we're starting to see a real change there as confidence starts to move back into that Melbourne housing market. And that, of course, has been signalled for most of this year by higher clearance rates. And clearance rates are a positive forward indicator of what's happening generally in the housing market. So last week, another strong result to begin July, which we've seen over the past couple of weeks, which sort of notionally should have been a little quiet because we're moving into the school holiday period and the midweek, I guess, hiatus that the housing market typically experiences. But even with the prospect of an upcoming RBA cut, maybe not this month as we've seen, but next month, that will only add to market confidence going forward. So these are the results. No surprise, auction numbers starting to dwindle. As I said, school holidays have started. Sydney auction, 645 auctions, down from 721 the previous week, but another very strong clearance rate for Sydney there, 77.7%. As a bit of a benchmark, Ben, when we get to 80% clearance rates, it's what we start thinking about using the B word, which is boom. And we're getting close to that B word now, the B word, which is boom. So we're getting really close to 70 to 80% in Sydney. But it's the consistency, really, that is a signal here. It's not a sort of a one-off, weekly result. We've seen consistent results, as we'll see in a minute, with the trends from the Sydney market. That's at 77.7%, a little higher than the week before, and a little higher than the same week last year. And here's the Melbourne story again, 77% clearance rate in Melbourne. These results are the strongest auction results Melbourne has had for about the last 3 years. And, last week was a similar 77.3%. Auction numbers down. As I said, no surprise, school holidays upon us. And they will continue to decline, auction numbers. But the big thing here is we're referring to the Melbourne market is to look very carefully at what was happening a year ago. And the Melbourne clearance rate a year ago was 62.8%. So, another way of putting that is that 6 out of 10 houses that were put up for auction a year ago were selling. Now we're getting 8 out of 10 houses selling for auction, which is a very strong result. The change from 6 out of 10 to 8 out of 10 is significant and does reflect what is a seller's market. Plenty of competition for properties that are for sale from prospective buyers. Brisbane also had a pickup in its clearance rate. We always expect Brisbane to be around about 50%. So 62% is a good result there for Brisbane. We know prices are still rising in that very, very robust Brisbane housing market. Adelaide down a little bit. It was the odd man out or the odd person out for auction results last weekend, lower clearance rate, and certainly well below where it was a year ago. And Adelaide's been a market that has shifted this year downwards, even though we're still tracking higher prices. A year ago, the Adelaide market was the strongest housing market in the country, or certainly the strongest auction market in the country. And Canberra, are you back, Canberra? This is the question we're asking. Finally, we're seeing an above 70% clearance rate in Canberra for the first time in some time. And we've been sort of, I don't know, not predicting, but looking for better results from Canberra, which we've been teased that perhaps have been coming through. But now we're starting to see that consolidate. Still a little bit more time to call the Canberra market as being a revival market, but certainly the results over the past week are pretty good. When we look at the longer term trends, these are the monthly clearance rates going back a year. You can see that Sydney, this is just, of course, last week's results. But even just with 1 week's results, Sydney is continuing to rise, the Sydney market. And of course, we know that lower interest rates have pushed up prices, and no surprise, they're pushing up auction clearance rates as well, and tracking higher than a year ago. When we look at the Melbourne change over the past year, it's pretty profound, from the low mid-60s now to the high 70s. And that really shows us, particularly, again, since those lower interest rates impacted the market from February. And April's always a quieter month in that Melbourne market due to holiday distractions. So Melbourne now up and running. Clearly, the data is supporting a revival in that Melbourne market, and it will build momentum going forward. And even though we didn't get an interest rate cut this month, I think that perhaps we could speculate that that'd be a bit more of a prospect next month, particularly if the latest quarterly inflation data comes out in line with the Reserve Bank's expectations, as we've discussed previously. Brisbane started to pick up. Good result there. Strongest result for some time in Brisbane. As I said, typically we see that around about the 50% mark. And Adelaide's been a bit quieter, so it's sort of gone against the trend of the other capital cities. This year, down a little bit compared to its boom time results that it had for most of certainly 3/4 of last year. And Canberra, hey, check that out. That really looks like a trend emerging to me. If they can hold that plus 70%, then Canberra homeowners would be expecting higher prices going forward. So we wait and see. And even though the winter months, are quieter anyway, so we can't read a lot into that. It certainly sets up the Canberra market and other markets, and particularly the Melbourne market, for a very positive spring selling season, which is not that far away. If you're looking for the latest auction clearance rates, you will get them every Saturday night on my LinkedIn account, Doc Andrew Wilson at LinkedIn, for the snapshot results around about 6 o'clock every Saturday evening. And then you get the full national report also on my LinkedIn account, Sundays around about 9 o'clock, which gives you the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer for over the week for each of the capital city markets. So if you've missed the latest weekly auction report for last week with all that those details or those insights, there's a QR code. You can scan that and it will give you a PDF copy to the latest national weekly auction market report. So as usual, Ben, we have the great giveaway that we give to all our viewers and listeners as part of the Wilson Weekly, and that's the My Housing Market Infinity Market Suburb Data app. We talk generally here about higher level markets such as capital cities and regions. This, however, gives you an opportunity to look at what's happening in suburban housing markets. What the app does is it tracks asking prices and rents in real time. So it's telling you what's happening now in those housing markets in terms of what sellers and agents are pitching for prices for particular suburbs and also for rents as well. If you want to get a copy of that great app, which everybody's scrambling to get hold of because it's a very valuable part of the tool set, I guess, you need for your property decision making. There's a QR code that you can scan, also a link there. Be advised, you need to get a password for that, and the good folks at Infinity will be only too happy to give you a password. So I'll give you insights into how you can achieve that. There's a screenshot of the app. You can filter it for price or rent. You can filter it for the capital city region or the outside capital city region. We're looking at Blacktown in the Sydney capital city region. You can filter it for house, unit, or townhouse. We're filtering for house. You can also filter it for the number of beds. So that means you can really drill down to specifics if you're looking for some sort of evaluation on your property, and certainly some guidance as to what prices are being sought at the moment in those markets. So here with Blacktown, it's not just the median asking price that we provide, it's also the low and the high. So it gives you a boundary between the lowest priced 4-bedroom house there in Blacktown and the highest price, and also gives you the number of properties that are for sale currently. So it shows you how competitive the market is. Exactly the same thing there for the rental market. You can see there the median rent, the low rent, the high rent, and the number of properties for rent currently for a 4-bedroom house in Blacktown. We also have a little add-on there for investors. If you're looking for what return on investment is, that is yields. So this is the return over a year for the current asking rent against the value of the current asking price, and that will give you the yield. So this gives you the top 10 ranked yields on a suburb basis for each of those regional breakdowns. This is for the Sydney region of New South Wales for a 1-bedroom unit. Not just the yields, but also the vacancy rate, the number of properties for rent and for sale. And if you don't know where these suburbs are, if you click on the link, it will take you to a map of the suburbs. So what a great little toolkit that is for you to assist you in your decision making. Next week, we'll look at the May building approvals and the May retail sales, and as usual, the latest weekly auction results. So I'm done and dusted. If you missed the report, Ben, you can download it there on that QR code in all its glory. And like I said, it's been a surprising week to many in regard to the RBA, but maybe it's just really a pause until the next rate cut next month. But we need to wait and see what that inflation data tells us before we can speculate a bit more clearly on what the Reserve Bank will do. So thanks very much, everybody, again for watching, and thank you to the good folks at Infinity for supporting this, and we'll see you next week.
Thank you very much, everyone. Thank you, Doc.